Over the last 10 years, I tried various systems and strategies to manage my money. And I've learned that the best system is not the most sophisticated one, but the one you can actually use and stay consistent with. So in this video, I will share with you a tool that helped me successfully manage my money using simple 50-30-20 rule. I will walk you step by step how I categorize my expenses and in which order. And at the end of this video, I will give you practical tips how to make this process effortless so you can stay consistent and feel confident and in control of your money. If you would like to download and use the same template that I have, it's linked completely for free in the description box below. Hi, I'm Sabina. I'm a chartered certified accountant with diverse experience gained at one of the top UK accountancy firms and in the industry. On this channel, I share knowledge and strategies about finance, entrepreneurship, and self-development to help you achieve your financial goals and build a life you truly love. Step number 1, tracker. This is my Payday manager. It's the color-coded spreadsheet with all formulas built in and preset categories. It's very easy to edit and you can customize it to reflect your personal situation. It has income section on the left in green, then 3 categories for expenses in blue, and at the top it has the overview and the summary section. Step number 2, categorize your expenses. First, you want to understand how much money you receive. That's the amount that lands in your bank account after taxes. Here you want to include your employment income, self-employment income, and any investment income such as dividends or rent. You want to put them in the left green section here. For example, I will put 2,000 for my employment income and 500 for my self-employment income. For the self-employment income, you have to take into consideration taxes so that you are not surprised by unexpected tax bill at the end of your financial year. There are 3 categories for expenses: fundamental, fun, and future you. In fundamental category, you want to allocate the amounts that you spend on your needs, which are the fundamental living expenses such as mortgage, rent, utilities, groceries, transportation. I will put 700 for my mortgage, 50 for my insurance, 10 for my council water and gas and electricity each, 30 for my phone, 120 for my transportation, 10 for healthcare, and 200 for groceries. In future you category, you want to allocate the amounts that you spend for your savings and investments into a life that you envisage in the next 5 to 10 years. That's things such as emergency fund, specific savings funds such as for your house deposit or for your wedding, and debt payments and your investments. I will put that in the blue category. I will put 150 for my emergency fund, 100 for my debt repayments, 50 for my self-development and education, 100 for my saving fund, and 100 for my investments. In the fun category, you want to allocate the amounts that you spend on your wants, which are the costs that enhance your life and make your life more enjoyable. Things such as entertainment, dining out, coffees, subscriptions such as Netflix or Amazon, your gym membership, or travel and experiences. I will put 300 to eating out, 120 to clothing, 90 to subscriptions, 100 to gym membership, 200 to experiences, and 50 for gifts. Step number 3, set your financial goals. In the world of finance, there is a popular guideline how to manage your money, which is 50-30-20 rule. It was introduced in 2005 in book All Your Worth, the Ultimate Lifetime Money Plan, when the economic landscape was very different, when the inflation and interest rates were much lower, costs of living were lower, and housing was also lower. So you might want to adjust these percentages to reflect your situation better. In this guideline, it suggests that 50% of your income should go to your fundamental expenses, 30% of your income should go to your fun expenses, and 20% of your income should go to your future savings and investments. For the purpose of this video, I will use 50, 30, and 20 percentages. Let's look at the summary in pink at the top. The formulas automatically calculated the totals per each of our categories. So in fundamental expenses, we have 1,140, future category 500, and future expenses 860. Let's put our ideal percentages now. So I will use 50, 30, and 20. On the right hand side, in a variance section, the formulas automatically calculated the differences between our actual numbers and our ideal numbers in percentages and in the currency. So you can see whether your actual numbers are in line with your goals or whether you're overspending or underspending. So in my example, I overspend in the fundamental category by 110, which is 4%. In the future you category, I was in line with my goals. And in fun expenses, I underspend by 110, which is 4%. Step number 4, reflect. Analyze your information and reflect on your spending to improve your finances. There is no point of categorizing your expenses if you're not gonna take any action. You want to check if you paid all your bills on time, if you overspend in any of the categories, if you did, why you overspend, and what caused that overspend. Knowing that information will give you power to make better financial decisions next month. If you underspend, you might want to consider increasing your savings and investments. You want to optimize your biggest expenses and find ways to keep unavoidable costs under control. For example, negotiate interest on your mortgage, compare deals. Can you buy the same thing cheaper? Can you shop at the cheaper supermarket? Or can you opt for a cheaper transportation? Good money management is finding balance between investing and planning for the future, but also spending on the things that you love today that make your life more enjoyable. Step number 5, tips. You want to create a system that works for you, that removes the willpower so you can use your energy for a bigger and more important financial decisions. You want to automate your payments by setting up direct debits, so all your bills are paid automatically, such as credit card subscriptions, utilities. This will remove the need to remember your login details and make manual payments. You want to pay yourself first and allocate money to the future you category before you allocate it to the fun category, and also make those payments automatic. You want to create separate saving accounts with a specific purpose, for example, for house deposit, for your wedding fund. That way you can log in every month and check and see how close you are to achieving your goals. And that way you will stay more motivated. You want to also create a separate spending account where every month you will transfer a certain amount of money, and rather than tracking your expenses throughout the month, you can just log in into one account and see how much you've got left before the next month transfer. You can make it a ritual for yourself and go to your favorite coffee shop. That way you will make this process more fun and enjoyable for yourself, and you will look forward to it every month. If you found this video helpful, please let me know in comments below, and I would appreciate if you subscribe to my channel. If you like this video, you might also like this video where I give you a free budgeting tool and walk you step by step how I set my financial goals and track progress towards achieving them. I will see you there.